Hi guys, and welcome to another YouTube video, another trade recap, a trade review, because I promised you guys in my Telegram channel that I will give you a trade recap of this trade that I took on Wednesday, on the 5th of August this week. So yeah, here we go. So as you can see, we always look at the chart from a higher time frame where you can see this is the whole day. So the day starts at 6 p.m. and the next day also starts at 6 p.m. So this is Wednesday. And as we can see here, we have 9:30 open right here. So we always trade New York AM session and look for trades starting right there. So as we can see right here, this was previous day's high because this is the highest high of previous day. So whenever you see something like this, that we trade above the previous day's high, we trade above the London high and above the Asia session high, that means that this is a very, very high probability point of interest for us to look for shorts and for us to look for a market structure shift to the downside. So now when we look at this at the lower time frames, we opened up right here at 9:30 a.m. And as you can see right here, at 9:30 we kind of chopped around a little bit. And right after 10 a.m. we start to spool to the downside and have a beautiful continuation and a beautiful short scenario that I was part of. So in my last trade recap, I talked about the importance of time cycles so that the market moves in specific cycles inside of specific times. And one of these cycles are 30-minute cycles. So every 30-minute candle. So whenever we look at a 30-minute cycle, which in this case begins at 9:30 and ends at 9:59, we always want to look at the discount and at the premium arrays of the previous cycle for us to determine if we want to take shorts or if we want to take longs. So what we do is we take the Fibonacci tool and we draw the Fibonacci tool from the previous 30-minute cycle. So as you saw, I took a trade after 10 a.m. and in this case, it means that the previous 30-minute cycle is from 9:30 until 9:59. So we look at the quadrant levels. So this is the upper quadrant level, this is the 50% level, and the lower quadrant level of the previous 30-minute cycle. So what we want to see now is that we want to look for shorts either above the upper quadrant level or above the 50% level of the previous 30-minute cycle. So in this case, I wanted to look for shorts. So I waited until the market showed me that we want to continue to the downside. So I wanted to see an aggressive move to the downside from 10 a.m. starting. And then after that, I didn't FOMO into any setup or into any move, but I waited for the market to go again above the 50% level of the previous 30-minute cycle. What I also wanted to see is that we go above the 50% of the previous 15-minute cycle. So as you can see right here, when we draw this level into our chart, so we don't forget that this is the 50% level of the previous 30-minute cycle. And again, if we look at the Fibonacci levels of the previous 15-minute cycle, then that looks like this. So it starts at 9:45 and it ends at 9:59, but the low of that 15-minute cycle is this low right here. And as you can see here, very beautiful that on the 1 minute time frame, the bodies did not close above this 50% level of the previous 15-minute cycle, but we just wicked above it. And that for me is a signature that we respect this level. So I wanted to look for shorts right there. It is so important to, first of all, look at the time in the market, but secondly, also to look at the points of interest. Both of those two factors have to align in order for you to get a good setup, to get a A+ high probability setup. And in this case, time was aligning with price. So after I saw us wicking above this 50% level of the previous 15-minute cycle at 10:09 a.m. and we closed below it, this is where I dropped down to the seconds chart and then entered the trade after I saw the reaction that I wanted to see there. So my entry was at 10:10 a.m. My stop loss was here above the 10:09 a.m. candle. So my entry looked like this, my stop loss looked like this. Then I was looking for my take profit. I knew I wanted to take a session low for my final take profit. So I wasn't looking for the Asia session low, but for the London session low as my take profit. And the London session low was this low right here at 4:45 a.m. And this is where I took my final take profit. So this is how the full trade looked like. It can be very, very simple, guys. Really, my suggestion to all of you is choose a strategy, choose a setup that is so simple and so obvious to you that you can repeat it over and over again and that you know it is a proven strategy that works. And then just execute every single day the same setup and don't overthink it too much. Just submit to the game of probabilities and submit to risk management, and that's it, really. So that's it for today's trade recap of my trade on Wednesday. I hope you liked it. I hope you found it insightful, and I will see you in the next one. Bye, guys. I love you.